What is happening to real estate prices in Glendale so far in 2023? I'm Dave Robles with Think Real Estate. Got the numbers fresh off the press here, and we're going to talk about what's going on in the last 6 months, January to the end of June, versus what happened in the last 6 months of 2022, which would be July 1st to the end of December. So, an important time period in my opinion, because 1 year ago, mortgage rates were about 5.5%. And prior to that, they were as low as 3% at the beginning of 2022. What I see the last 6 months of 2022 as is kind of a market of shock. And buyers were just kind of had the wind knocked out of them, so to speak, because of the interest rate rise. Now, these last 6 months have been pretty stable with rates in the 6s, and the shock has worn. So let's see how that translates to prices and values where you live. We're going to start with 91201. This current 6-month period saw an increase in price values of 16%, okay, versus the last 6 months of 2022. That's a good jump, incredible jump. Let's go to 91202. We saw an increase in sales prices 18%. Okay, huge jump. Let's go to 91205. This is going to be the Adams Hill area. Prices dropped 7%. Okay, interesting point there. The days on the market jumped up dramatically from 15 days to 48 days on the market. The other neighborhoods stayed relatively the same. Let's talk about 91206. The average sales price rose 16% in that period. Let's go to 91207. My neighborhood where I live in Ross Point, the average sale rose only 3%. Interesting. So not quite as big a jump as the other neighborhoods saw. And 91208 saw a price decrease of 4% in that area. And let's talk about Glendale as a whole, the entire city, 200,000 people. The average price in Glendale rose 8%. Just so you know, the average price went from $1,437,000 to $1,557,000 for a single family home in Glendale. So as the average house price continues to rise in Glendale, I think it's safe to say that the drop in home values didn't come. It didn't happen. I think it may have paused for a moment in November, December, January. And I think if there were any soft prices to take advantage of, that was probably the time. We had, again, mortgage rates were still shocking people and volume was down, buyer applications were down, and I think that's past us. So we're looking at probably another 8% appreciation over the next year. That could be a little bullish. Maybe it's 5%. Still not too bad. So there you go, folks. Today we're looking at interest rates in the upper 6s, and it's a pretty volatile mortgage rate market. We're seeing inflation down to 3%, which should provide us some help in the mortgage interest world, but it's not. And it seems like the Fed wants to get together one more time and raise the rates. Okay, so we're also seeing our buyers who are happy to buy homes. They just want to stop renting, okay? And they've grown out of their current situation and they have accepted the fact that rates are what they are and it's time to move on. So there you go. That's what's happening in Glendale. If you have any questions, please reach out. We're happy to help.